This one entry signal is the same setup that gives me days like this, and I use it almost every single day. This one entry signal completely changed the way that I trade. It's simple, it's repeatable, and the crazy part, nobody actually teaches this. I'll show you exactly how I use it step by step, including real chart examples that give me weeks like this and like this. Quick disclaimer, I'm not here to give you financial advice. I'm just showing you what's worked for me personally. You see, when I first started trading, I kept missing the perfect entries. Either I got in too early and was stopped out, or I waited too long, I hesitated, and I missed the move. But when I discovered this entry signal and learned to wait for it patiently, everything changed. This one pattern literally became my entire trading edge, and I'm about to share it with you for free. So here's the concept. Price doesn't move randomly. It builds liquidity, it takes it, and then it continues following higher time frame trends, especially if you're trading something like gold, where you have macros and fundamentals in alignment with the technicals. Now, there's two ways that I use liquidity, and it depends on the time frame I'm looking at. If we are external range trending market conditions like gold, when we broke out of this consolidation and into all-time high territory, just like we were in April 2025, I will use the daily time frame to mark out price inefficiencies, otherwise known as gaps. Now we see here, just before the 3 trades that I am going to share with you, and these are trades I took live, we have an area of imbalance in this candle on the 7th of October, where it closed with a bullish body and it left a gap between the previous day's wick high and the next day's wick low. Now look what happened on the Thursday. Not only did it come back and fill the inefficiency, the following day failed to create a new low, give a retracement, and also we took the liquidity resting below the previous Wednesday, which we can mark as a previous day low. Another area of liquidity and significance when looking at the daily time frame. Let's move on, and we can see there are plenty of inefficiencies that price left behind, but that's what happens when you have such volume in the markets. We can't expect every price inefficiency to be filled, but every time we create a new one, that's the nearest one that we want to be focusing on. So we have another one on Wednesday the 15th of October before my next 2 trades, and we have a distance between the prior wick and the following day. And you can see price comes and mitigates at least 50 to 60% of that. The 50% mark is the sweet spot. Often you'll get a complete fill. Again, the candle comes, it takes 50% of the gap, and it takes the previous daily low as well in the process. So as you can see, what's happening is price is building liquidity, coming back to liquidate, and then continuing in the overall macro direction. And if there are fundamentals involved, usually they play a major part in the liquidation or the continuation of the overall technical trend anyway. Now let's jump down to a 4-hour time frame where you can see the 3 entries. And I took these off the 15-minute time frame, and I'll explain to you the entry model in this video as well. But we can see even clearer now, we have this pullback, which came into this daily area of inefficiency. We see the reaction at this point. Gold's been very good to me recently. I've been taking advantage of this whole move up. I'm just showcasing 3 trades in this video, but if you want to see more, I upload videos like this every single week. So what you can see here, once it filled this gap and took the previous daily low, price went and took the structural high. We're now into more higher time frame structural all-time highs. Now what price is doing here is it's creating inefficiencies along the way. We see a 4-hour gap that was mitigated by this following candle. This created a consolidation on the 15-minute time frame, which I'll show you shortly, the entry model that I took and the confluences behind that, the time of day, the stop loss size, the execution candle, everything. Price then went and took the next structural all-time high and formed yet again another 15-minute consolidation inside of PIB, which price then came back because that was the next daily gap, and you can see price filled out all of this inefficient pricing on the 4-hour. We had a 4-hour gap right here, which was taken. And in the process, like I've mentioned in previous videos, on that sell-off produced a new 4-hour gap, which was my initial target on the final trade, and then overall target, which was again, all-time structural highs where my TP was at. And we've currently traded away from that. So Call me lucky or call it excellent trade management. It could be a mixture of both. It's not the first time prices hit all-time highs and completely retraced. In fact, when we go back to April, which was a six-figure month for me, I actually take profit on 3 buys at the round level of 3,500, which was exactly the turning point at the top here. And then price consolidated for around 100 days. We can't even fit it on the screen. So that's what happens with gold quite often. It likes these psychological levels, but it's also very driven by the macros. So we have daily bullish trend. We have a very bullish market with gold. It's the safe haven when things are not looking too good in the markets. We have Donald Trump introducing tariffs globally. We have China more recently imposing their own tariffs on the US and the rest of the world, and Trump's retaliation to that. So gold has been a true safe haven, while there's been a lot of volatility and unpredictability in the US stock market, such as the NASDAQ and the SP 500. Gold has done nothing but create higher highs and higher lows, which is a trader's dream. As a trend-based trader, this is exactly the kind of market that I want to be taking advantage of. And that's why I've done so well, especially since we broke out of that last consolidation, trading gold. So we have higher highs and higher lows, daily gaps mitigated, 4-hour consolidations. We don't have 4-hour lows being swept because we don't get that as often on gold anyway as a nature. That's more of a liquidity concept that happens on indices, as you've seen I've taught on previous videos. And I still very much trade indices with 4-hour highs and lows and price inefficiencies. But with gold in particular, when it's going, it goes. Next up, let's go through the actual entry criteria of all of these 3 trades. By the way, this entry signal is just one part of my full system, the same one that I use to trade full-time with no indicators, no guessing, and clean confidence. If you want me to walk you through the entire process step by step every single day, I'll leave a link below, but for now, let's push on. So understanding where price came from, and like I say, I did go long down here, but for the basis of this first trade, we understand we had this liquidation, we had a break of structure to the upside, so we've continued trend, and we've headed into the next consolidation where price has filled more inefficiency. Now let's come all the way back on the 15-minute chart, which is the next step. Some of these are taken on the 15-minute, some of them were refined on the 5-minute, but it's the same principle. All I'm looking for is liquidation, confirmation, and then entry. So here, we had a bank holiday Monday on the 13th of October, so very little happened. We then had, on the Tuesday, some volatility. We had gold dive lower, which all it did was it liquidated anything below Asia lows. It's inducing sellers into the markets. The stops are above here. It's also coming down into this area of inefficiency, this 4-hour gap, which was filled prior. And then we just consolidate. If I just very vaguely put this range on, we don't need to be all that accurate. We can see we consolidated inside of this range during the London session. We consolidated also inside the New York session. Now, when gold is consolidating, we don't really want to be trading that aggressively. We can still trade, but there was no liquidation event that caught my eye. With this, what I wanted to see was a breakout of this range, which we got late New York, and some of these positions I took later on in the evening. And we can see as soon as we broke out of this high, we create a new bullish range, and all I'm waiting for, guys, is a run on liquidity. So I have this internal range liquidity, which is taken, and this bullish candle, this first 15-minute close bullish candle is where I'm executing. Stops well out of the way. This is a swing position. I'm expecting to hold this overnight, which I did. You can see the Asia session is right there. This trade for me was around a 5-to-1. I'm not targeting just structural highs because that would have been not even a 2-to-1. It's not worth my while. I have a target short term of these highs. I'm not taking partials. Screw that. I'm just moving my stops to break even the very next morning and letting the trade play out to TP. So very, very simple. We wait for consolidation to break out into a new range, liquidation, and then entry model is a retrace candle on the 15-minute time frame. If I feel I'm not going to get that 15-minute liquidation, if there's more volume in the markets, then I'll go down to a 5-minute time frame, and I'll show you one of those executions later on. But for this, we did not have much momentum. We basically consolidated for the whole trading day, including New York. So I'm expecting price to liquidate more often in those range-bound markets. Let's move on to the next entry. So we have this red box, which remember is the daily gap, and that's for the next trade, right? So let's move this out of the way for now because that's not part of this trade. This was simply a break of all-time high structure again, a continuation model, very, very clean. We have the highs above here of London. We have the lows down here of Asia. And again, we've got the same thing. So if we are consolidating inside New York and the London session, but we've broken above Asia, which is this pink box, we're expecting more upside. Weekly, daily, 4-hour, 15-minute, they're all aligned. We've not got any macros, any fundamentals to say we should be taking our foot off the gas pedal. The opposite. We have a trending market, and because we've consolidated inside this range for the whole trading day, what I need ideally is a run on 15-minute sell side liquidity, which for me was the New York lows. You see this gray box here is the New York trading session, not the entire session, but it's the session that I specifically mark out, which is from 2:30 till 4:30. That's British Standard Time. And I waited for this running on liquidity. And I could have got in on the earlier candle, but I didn't, right? It's not about the perfect entry. It's about getting the right direction. Ideally, timing is fine outside of New York, but timing is obviously very important. If you're trading between Asia and London, you're probably going to be liquidated more often than not. And even between London and New York, you're also going to become liquidity. So during New York session and a few hours beyond is like that sweet spot for me. I actually got involved on the next candle because I wasn't quite at the charts at the time. My stops are below the previous 15-minute low. And again, I'm not just going to target all-time highs because it's only a 1-to-1. I'm expecting more. I'm expecting continuation. So for this one, I locked in a good 3-to-1, almost 4-to-1 on this position. It was another swing trade I held overnight. So I took these on a mixture of personal accounts. You can see on the screen, I'll place the screenshot now. And also I'm using Funder Pro because they're just such a great CFD firm, especially when trading gold or indices. Now, the final trade, I'm going to bring this back and we're going to jump out to the 4-hour time frame just to make sure you've got the whole analysis. So in fact, let's go to the daily first. So daily, we're looking at this area. So we've just bought inside of here, took profit, right? Price comes back the following day and it takes the previous daily candle's low, right? That's what the PDL is. It took the whole of price action of the previous day. It then wicked, it stopped, it reacted at that point, right? We also have this price inefficiency between the prior candle wick high and the next candle wick low. This area of imbalance and price comes down and it mitigates over 50% of that before then reacting to the upside. On the 4-hour chart, when we go back, we can see that bearish retrace left inefficiency on the way down. Plus, we're very bullish on gold. We're expecting all-time highs once more, right? So now let's go down to the 15-minute, back to our entry time frame. And what are we looking at here? So price was very bearish that first day on the Friday. So this was a Monday entry. I'll put the screenshot up here so you can see that I took this live as well, right? So we have a 15-minute market structure shift. What do I mean by that? I mean, well, on the Friday, we opened below the initial balance of Asia, which is just the first 60 minutes, that yellow box there. So when we open below, it's a sure sign that we are likely going to continue lower that day. We ended up bearish on the day. We drove into that higher time frame area of liquidity, that gap, that inefficiency on the daily, the previous daily low as well. And then we broke out to the upside and failed multiple times to create new lows, right? So we had a market structure shift to the upside in the 15-minute, giving us this new bullish 15-minute range. We have this 4-hour gap above, which is the immediate target. It's like a draw on liquidity. See it as like a magnet. It's going to draw price in, right? And then obviously, there's going to be a lot of trading volume set up here because this is a very bullish market. There's a lot of buying power involved in this. So we've got to target all-time highs. We have confidence that price is going to blast straight through this draw on price here, this 4-hour gap, and it's just down to the entry model after that. So this was a London trade actually. So again, initial balance of Asia, you don't need to use this. And yes, it's an indicator. I know I say I don't use indicators, but I use session boxes just so it's visible. Not so much for me, but for traders like yourself that are watching me on videos and my students so they can see what I'm actually talking about. It's helpful when you can see it on the chart. But in terms of an indicator, I do really like the initial balance of Asia. So all you do is you go to FX Market Sessions by Boytoki, and your Asia session for me is midnight to 6 a.m. UK time. Put opening range and then scroll down to opening range periods in minutes 60. So it marks out the first hour of the day. Now you can see that the previous day, if it opens lower and you have a draw on liquidity higher time frame lower, then it's a really great confluence to know that that's the direction price is going to head that day. Same thing, flip reverse. If it's taken liquidity of a higher time frame and you're expecting price to reverse and price is opening above that initial bounce and respecting it, then you know that it's an extra confluence for higher prices. So what we have here is London session is failing to create new lows. We're inside this bullish range after a market structure shift to the upside. And all I need is a run on liquidity. Now, this one was a 5 minute. So I'm just going to replay this back so we can see. Jump down to a 5 minute. The reason I went to a 5 minute is just because I didn't really expect price on the 50 minute to come lower. And it did, you see. The better entry was here. It's not about a perfect entry. So this was literally just any 5 minute low inside of here for me is a run on liquidity. I'm expecting a large amount of volume to the upside. Why? Because if I come back out to the 15 minute, we ran into the previous daily low that evening. And then we've failed to create new lows, right? And we've filled this gap. Price is very efficient on the daily now, the last few days. And then we're bullish overall. So we're in this position. I'll show the screenshot on the chart and you can see TP was hit. Very, very straightforward trend following liquidity model entry strategy that's repeatable time and time again. This one entry signal completely changed my trading and it's doing the same for my students. My students are passing funded challenges, they're making consistent profits and finally trading with confidence instead of confusion. If you're ready to master entries like these, understand liquidity properly and finally trade with structure, click the link below and I'll personally walk you through my full system step by step so you can start trading with confidence and clarity.